Hello and welcome to another update video about the DXY as we are in a new trading week. Hope you all had a great start to the week. The situation hasn't really changed to my last update, but we want to add a bit of a micro count here. And just a reminder that I see this here as an ABC structure, which in the coming months can take the DXY into the low 90 US dollar region. However, first of all, we need to establish if the DXY indeed topped here with that high that was formed in October at around $107.40. If it really needs to, it can still stretch higher. We need proper confirmation that it has topped. At the moment, I'm leaning to the idea that it has topped, but it's not very clear yet. It's not very clear. And in this video, I want to tell you what I need to see to get more confident in the idea that the DXY topped in a B wave in October and that we are now coming down in this 5-wave move to the downside in a C wave into the low $90 region. If it really has to extend higher and if B wave needs to extend, one more high would be absolutely acceptable. And then the next fib level to watch would be $108.71. That is the 61.8 retracement level of the move to the downside to this A wave low. Let me just double check if the fibs are okay. To be honest, I think I even need to, yeah, they are wrong, but that doesn't matter so much now, but yeah, they should be here. So I thought I updated that already, maybe didn't save it. The next fib range or the next fib level to the upside would be $109.25. Okay. So there is still plenty of space for the B wave higher if it needs to. Okay. Possibly all the way up to $111.65, but that would be quite a lot and I don't think it needs it. Now, let's assume the top might be in. Again, it's not really confirmed, but we want to talk about, okay, what does it need to do to basically confirm it? First of all, we need to understand that on this chart, basically, the chart has done what it needs to do to the upside. So within this B wave, this C wave is technically full. We have 5 waves up, as you can see. Now, if we say the move to the downside has started, then I need to see a 5-wave move down to confirm that, followed by a 3-wave corrective rally. Now, this would be indicated here by the 1-2 setup that you can see here on the chart. Okay, so you might not want to wait for that, but that would be the ideal confirmation. 5 waves down in circle wave 1 and 3 waves up in circle wave 2, which would be an ABC structure. Additional confirmation we will already get when we break below this swing low, which is at $104.70 pretty much, or 60. And then additional confirmation that we've topped will be given with a break below $103 support. How could a micro count look like? Well, best I can tell you is that we are obviously in circle wave 1, which would be a 5-wave move. This to me looks like a wave 1. We'll change the wave degree in a minute. This could be wave 2. And now we are coming down here in 3, 4, 5. This would be ideal if we follow through now to the downside like this. Yeah. And then we had here a very complex flat correction that formed in wave 2, which would have been an ABC structure, basically quite straightforward, actually A, B, C to the upside here. Yeah. Or even a WXY, but I'll take that out, don't need that now. And important would be to understand, okay, where could that 3rd wave now basically get to? So first of all, you need to understand that against the last swing high here at $107.08, I think the focus can be on lower, okay? However, already I would say we can add another resistance area here because really there will be a first warning that something more bullish is going on if we see a break above the 106.64 level. So I would really highlight that I'm focusing on lower against 106.64. And what would be a target for this 3rd wave here? So for that, we take the length of the wave 1. We go to the high of the wave 2, and I need to just activate all the fibs. And then ideally, I'd like to see it. I mean, it already reached the 1.236 extension, but ideally I'd like it to go a little lower to ideally 104.18. That's the 1.618 extension, then a fourth wave, and then the fifth wave down, which could take it into the region between 103.52 and $102.44. Then we should get a three-wave corrective rally. So that should give you all the parameters you need. It tells you what I'm leaning to, and also what would happen if we get invalidation, which would then be the next fib level to the upside. Okay, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, including some stocks updates, then check out our S&P 500 and stock service. Link is in the description. There are written updates, daily video updates, even intraday updates when there is a lot of movement. So, and you can get access to community and so on. So check it out. Link is in the description. Have a great week. Thank you very much. Bye-bye.